there's a certain level of time freedom that you can buy yourself with certain alternative investments, real estate, businesses. And that was really what I was pursuing. So it was a combination of, hey, I got to get out of here because something could happen that drastically reduces my income. And also, how do I have that life? I want to be the guy on the boat. I don't want to be the one selling the stuff.
Absolutely.
I want to be that one.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
Hey everyone, I'm your host Ted Patel, and welcome to this week's edition of Decoding Cash Flow podcast. I'm here with Justin Moy. Justin is a real estate investor and a syndicator who began his career in real estate sales. But soon he started looking for ways to turn his transactional income into long-term wealth. And he found his answer through real estate syndication. And now he helps sales professionals build passive income through commercial real estate investments. Welcome to Decoding Cash Flow, Justin. It's a pleasure having you on the show.
Yeah, Ted, thanks so much, man. I'm excited to kick things off. This is I've listened to a good amount of the episodes, and it's cool to be on this side of the screen, I guess.
That's great. Yeah, we'll have a great show today, I'm sure. So, Justin, before we get going or dive deep into your area, your niche, can you just give us a little bit background about yourself? How did you get started in real estate, and what's your
Yeah.
focus as of now?
Yeah. So, man, my real estate journey has been pretty long. So I'll turn 31 this year. And my very, very first office job was I was 17 years old. I got an internship at a commercial real estate office. And I just thought it was so cool. It was such a cool environment. The brokers, I was helping them with their tours and their decks, and they were in and out of the office. They were celebrating big deals, and I just thought that environment was so great because I was at that point in my life where I was thinking about what I want to do. I was getting ready to go to figure out if I wanted to go to college or what my path was gonna be. And all I knew is that I dreaded the thought of being behind a desk all day. Now, I knew I wanted to work in some type of office environment. I want to have weekends off and things like that, but I didn't know what I wanted to do. And so, real estate as a sales role really appealed to me because I was always fairly good at sales. I had a somewhat of a natural ability to talk and think fast on my feet. And, the real estate sales game allowed me to be in and out of the office and celebrate and have the infectious energy that I just felt in that first office job of mine. So when I was 18 years old, I got my sales license, mostly as a way to avoid going to college, and still having an answer to my parents when they asked me, well, what are you going to do for money? How are you going to make money? I said, well, I'm going to sell real estate. So I did that for a good amount of years. And really what anybody who has been in a direct production role, whether it's sales or entrepreneurship or something where you're held to, really your income is held to performance, is that it's very, very stressful. Even if you're doing good, you always have this nagging thought in the back of your head, like what happens if the spigot just turns off? What happens if my deals dry up? What happens if, next month turns into a bad month, turns into a bad quarter, turns into a bad year?
Yeah.
You always have those aching thoughts in the back of your mind. And so I was always very stressed out, very high strung. This is interesting. I actually, when I was about 21 or 22, my hair actually started falling out. And I know the listeners can't see me, but I have a full head of hair. My grandpa, he's 94. He has a full head of hair. Like the Moy family, we hold hair pretty well.
Uh-huh.
And I started going bald because of the stress. So I thought, I got to do something. I'm making good money now. How do I buy my future so that I'm not as stressed out? And, real estate investing, of course, was a natural answer to that. I've always been a go big or go home kind of guy. So I always looked at bigger properties and so stumbled upon syndication. And that was, about 5 years ago. So now we've been just managing funds and operating properties and helping others invest passively in value add properties mostly.
Awesome. And what were the main steps that you took to transition from, sales to an investor? How
Yeah.
did you get to that point?
Yeah. So, there's a big education gap. And I think a lot of people, when they think of me being a broker from when I was 18, they go, oh, it must have been so easy to make the transition into investing or into commercial. And, I won't argue that it was probably easier than maybe coming from a totally different field, but really it's a steep learning curve. And
Yeah.
so I always tell people it's the same with anything. You're going to pay either with time or you're going to pay with money. And to me, I chose to pay with money. Then you also have to put in your time, but I joined formal
Yeah.
mentorship programs. So I'm a really big fan of programs like that. If you find good ones, if you find good coaches and good mentors, they're worth a good price. So they help you learn faster, avoid very, very costly mistakes. As you know, in this game, one mistake could really be the nail in your coffin. So you really don't
Yeah.
want to go in there flying by the seat of your pants because are really volatile moments. So to me, I tell people, I always like to pay for knowledge and pay to essentially get into a time machine and be able to accelerate my business a lot faster than doing it on my own. So that was a big part of it. My career in real estate sales helped, but it's still a fairly large knowledge and experience gap to go from residential to commercial and then to go from brokering to investing.
And I like your point where you said, paying for coaching. Yeah, so there are many avenues, right, where you can get education. You
Yeah.
can do the podcast,
Hmm.
you can search internet, get all the articles,
Yeah.
publications, read through it. But the real time experience you can only get when you join someone who has really done the deals, who is
Yeah.
in the market, you know.
Yeah.
And that will of course cut down your time to reach your goal to
Yeah.
maybe half or less.
Yeah, it should. And it's if you pick a good program and you really buy into it. I
Yeah.
think a lot of times there are some people that say, well, I don't want to pay for a program, or hey, I don't have the money to pay, or I'm not willing to make that investment right now. And that's totally fine. You can, like you said, there's a lot of information for free. Your
Yeah.
car could be a university on wheels at this point. I mean, all the information is in podcast form now, 100%
Mhm.
free. It's just about having it catered to you specifically just helps you get there faster, helps you digest information a little bit better. And there's more of an urgency to execute on what you learn when you paid a good sum of money for it, as opposed to a lot of the ideas we get online or through videos where they come and go. So I think that buying is important and really you having skin in the game. And at that point, once you pay, it's up to you to execute. And there's this
Yeah.
this fire beneath you to make it worth it. So I think it's
Yeah.
helped.
Yeah, it's helped. And the other thing is, it's not only paying, right? Sometimes you can work with someone for free.
Yeah.
Just add a value to what he or she might be doing.
Yeah.
Just latch on to what they're doing and
Hmm.
work with them. I started my real estate career the similar way. I worked for someone for like 6 months for free, just
Yeah.
learned in and out of the real estate construction,
Yeah.
investments, everything. So
It's
yeah, there are
especially
many
those,
avenues.
like the construction side of it, a great conversation with a good and reputable developer will get you further than any book that you can read and get to look at their projects and get to see
Yeah,
the stuff that they don't teach, like just the stuff that comes up in a deal that you would never have thought that you have to deal with. A lot of these things, you learn on the job, and real
yeah,
estate investing or any field where there's a lot of education, it's no different. It was the
yeah,
same when I was in sales, and you can read all the topics about sales. You can listen to all the sales podcasts. You can watch all the videos, subscribe to all the newsletters. But then eventually you got to pick up the phone and you got to make sales. You got to make calls. You got to knock doors. And that's really where you learn a lot. So, it's part of it paying. Yes, it helps. But it
mhm,
helps push you into doing mode. And that's really where you're going to absorb a lot more of the info.
absolutely. And while you're talking about the sales, right? Tell us something about that career. Like what
Yeah.
pushed you from that career to looking for the other avenues?
Yeah. Ultimately, it was, sales in that role, it consumed my life. When you are 100% commission based and you're always kind of feel like you're on the clock and you always feel like I said, that anxiety that just, it's never gone.
Mhm.
Even high earning sales professionals who are very, very consistently top performers, they always have this a little bit of insecurity about the business that, hey, like something could happen where something turns this off. For me, that big fear was regulation. I was in the Bay Area of California. My average home sale was $2.2 million. So you can imagine when I would see my commission checks and think to myself, man, I bet you there's a lot of technology looking to actually eliminate this because ultimately it gets significantly easier to sell homes as the MLS comes up and as technology comes up, but commission stayed the same. And we started to see that with like Redfin was the first like flat discount listing service.
Yeah.
And that was starting to gain a popularity. For sale by owner platforms are starting to gain a popularity where people could just list their homes themselves. And I thought to myself, well, if I exist and there's this big motivating sector that's looking to essentially eliminate me because I'm an expensive line item on a transaction. A broker for luxury properties is very expensive to pay. So to me, that's what it was. That was like, hey, this is not going to be sustainable in my opinion, and I want something that's more steady, more even keel, more predictable, and less stressful. One thing is I always sold a lot to investors. It was like a niche that I accidentally fell into. And I remember, so I kind of knew how the numbers looked, but I remember whenever I was working with my clients, they were always so hard to get a hold of because they were on a boat, they were on a beach, they were in another country somewhere. And I'm like, man, I'm over here slaving away, slinging houses, and they're like never around. They're just always out doing, living their lives. So that really appealed to me that there's a certain level of time freedom that you can buy yourself with certain alternative investments, real estate, businesses. And that was really what I was pursuing. So it was a combination of, hey, I got to get out of here because something could happen that drastically reduces my income. And also, how do I have that life? I want to be the guy on the boat. I don't want to be the one selling the stuff. I
Absolutely.
want to be that one. So those are the big ones for
Yeah.
me. It really pushed me to
Yeah.
change up things.
And you're absolutely right, right? Recently, there was a suit against the Realtors Association,
Yeah.
where now moving
Yeah.
forward, maybe in June, July, uh, uh, the seller's agent won't be able to charge double the commission.
Yeah, I
You
mean,
never
it's always
know. Yeah,
stuff. And it's an industry that and no matter what any real estate agent tells you out there, like, yeah, it's significantly easier to sell homes now than it was back in the 70s, 80s, and 90s when those payment structures were in place. So, yes, that to me is an industry that does have to be aware that they're fairly expensive for, in my opinion, what they do. And it's not a knock to real estate agents out there. I just think, if you look at it, there's other technologies coming out that's coming for that field. And I think they're starting to get adapted pretty well, especially in the more luxury space where, yeah, like that's a lot of equity that we're taking right off of the top in a form of a commission.
yeah. And you said you help investors, right? The sales or the realtor individuals to find the deals and establish or build their passive income. So
Yeah.
what are the steps like? Oh, can you expand on that? What do you do?
Yeah.
Let me
So
get it.
just because of my background, a lot of our investors tend to be in the sales field. Some of them are in real estate sales, a lot more typically tend to be in like high ticket tech sales or med device sales, something like that, where really the ultimate goal is to start buying cash flowing assets. That have a certain level of what we call value add, meaning we can force appreciation and really hit higher return metrics. But really, the big goal is every investment that I make, if I invested it today, I want it to start paying me tomorrow. And I want that for our investors too. The goal is really not to work until you're 65 or 70. Who knows what the age will be in the next couple of decades? Like in France, they raise it 2 years and the whole country rioted. In America, they're talking about doing the same thing. The point is not, in my opinion, to work up until you're in your 70s and then get to retire. The point is, when can I become work optional as fast as I can so I can go enjoy the life that I've built? And to me, real estate is the most risk adjusted way to get there. Now, one thing that social media has done a very poor job of is glorifying real estate investing as like this hands off passive income. They always say this thing, it's like the tenant
Yeah.
pays the bills, the property manager does all the work, I collect a check. This is so easy.
It's not that easy.
Yeah, if it
Yeah,
was, why wouldn't the property manager just
yeah.
buy the property? If
By
I'm
the
going
way.
to do the work
Yeah,
anyways, I might as well own it.
yeah,
So I think that is a really big fallacy that a lot of people get trapped into. And I always like to tell people, if you want passive income, don't buy property. You want to invest in property. You want to invest with either guys like you, Ted, or companies like ours, where all the work is done. You send a check and then you get money back. That's it. That's the extent of your duties. So yes, it's while buying a rental property is not a 40-hour work week job. It does require your time, your energy, and at some point there's something that we call return on headache. And I can
yeah,
promise you, those single family homes, that return on headache starts to become very slim as you start to build a portfolio up that's sizable enough to make a difference in your life.
yeah,
So that's why I think there's twofold. One is I want sales professionals to be able to slowly buy back their time with every investment. And then two, I want them to realize that if you want to be passive, be passive. Don't buy yourself another job by buying a property somewhere in Pennsylvania that you're going to have to go fly out to if something happens. So those are really two big things that we look to educate people on and solve for our industry.
Awesome. And when we talk about the passive income or investments, what are the
Yeah.
different kind of assets you look into in commercial
Yeah. So
real estates?
So recently we've been all multifamily. So we like apartment buildings. Now apartment buildings over the past couple of years, waters have gotten a little bit choppier. I think prices are still a little bit overvalued. And so we have some good indications that these next 2 years, we're going to see some corrections. So we're still waiting for some of those opportunities. Also really like short-term rentals if you can diversify your risk through a fund structure. And we also are looking into RV parks, mobile home parks, and debt funds. So all things that are looking to really diversify risk and buy into assets that have not had price inflation yet because of institutional operators coming into the space. Right. The second that BlackRock starts buying $10 billion worth of multifamily real estate, that asset class is seeing a little bit of price inflation. And we want to start looking for those assets that have the good fundamentals like apartment buildings do, but have not seen that price fluctuation yet. So we can catch those tailwinds and be on that upswing instead of buying things at their peak. So apartment buildings, we like short-term rentals in the form of funds are very, very strong. That's one of our best performers right now. Debt funds, which is your money is getting loaned out. You get a fixed interest payment. RV parks, mobile home parks, those are things that are really exciting to us in the future.
Awesome. And with regards to these investments, right? Any particular areas where you're more focused on?
Yeah, so we really like the Midwest. We think the
Midwest.
Midwest has seen a lot of, and it depends on what so right now we're talking more residential. The Midwest tends to see more slow, steady, predictable growth as opposed to there's markets, and we do have holdings in Dallas and in Phoenix, where I don't think they're boom and bust markets. I think some people say that as trigger words. I don't believe they're boom and bust. I just think that they boomed and now I'm buying at the top of this boom and I don't know where it's going to go from here. If a market sees 17% rent growth last year, I don't know what it's going to do next year. But if a market has seen 4 to 5% every year the past dozen years, I feel pretty good that I know where next year is going to be. So we really like Midwest markets. I'm in Kansas City. I think Kansas City is the most slept on market for residential. And when it comes to RV parks and mobile home parks, pretty similar thesis. But Midwest for us, we really find a lot of opportunities out here.
And tell us something about your first deal, first multifamily syndication, or the first deal.
Yeah. So first deal was done through partnerships, thankfully.
Okay.
So I joined, like I talked about in the beginning, a coaching program that had a mastermind to it, that had conferences. And I met this guy at a conference and he had exactly what I needed and I had what he needed. Meaning I had no money and he had lots of money and lots of access to money. So in the real estate investing space, specifically in syndications, that's typically how you partner up. I find the deals, I do asset management, I underwrite deals, and then somebody else brings the money. And so I was searching for deals, and I finally found one that worked. And I just started calling people that I met at that conference saying, hey, I don't know if you remember, we met about what was like a month ago. I found a deal that looks really, really good. Do you want to talk about it? And through that, we both had coaches that we had paid to look at our deals. We had both the coaches look at the deal. It was a smaller 40-unit apartment out in St. Louis County, North County, and completely value add. One thing that was great about my partner too is he, like you, is a developer. So he looks at a condemned building that's completely empty and needs to be filled, and it's not a problem. Doesn't scare him at all. He understands how everything needs to happen. And I'm local, so I was able to find the deal and manage things like that. So it was a really, really good combination of our skills, our abilities, and where we were at in our investing journeys that came together and allowed us to take down this deal. And we're actually getting ready to sell that deal actually either this year or maybe next year. We've got some pretty good offers so far on it. So that's good. It's good timing. That's looking to come around full circle here, hopefully pretty soon.
How much did you buy it for?
You bought it for $1,050,000.
Okay.
Yeah.
And you said it was a pretty heavy value add, right? So
yeah, it was a pretty heavy value add.
Or?
No, it was empty. It was actually, so it was 40 units. There were about 4 tenants living in it. And the tenants didn't even have leases. So really there was nobody living in it. So it was a complete, everything needed to be done. We bought it for $1,050,000 and the CapEx budget was just about $500 to $700,000. So, it was a pretty significant lift, and 40 units is not that big. So it's a pretty significant budget for that small of property. Um, and it was just about, renovating them, filling them up, and then putting in great management systems to really help that property. And of course, now it cash flows and it does well. And it appraised very well too. And we got some pretty good offers on it.
Awesome. And this wasn't syndication, as you said. It was just a joint venture, right? JVs.
This was a joint venture, yeah, between, it was us, me and three other partners. So four of us all together, with two being more passive, and then me and the partner I found being more on the active side of it.
Okay. And as of now, you do more of a syndication fund of fund model, as you mentioned.
Yeah. So, fund of funds is a fancy term for saying other syndicators outsource their capital raising to us. So at this point, what I spend most of my days doing is meeting with, educating investors, and analyzing deals that are sent to us from operators. So people will come to us and they'll say, "Hey, Justin, we're buying, a $40 million deal. We need $20 million for down payment and closing costs. Is this a deal you and your investors are interested in? If so, we'll commit a certain amount of money and we'll negotiate stronger terms for them, and then invest with our investors as one big entity." So
Okay.
people really like that structure because it allows them to be part of a highly leveraged conversation, meaning, hey, we're writing a 7-figure check. We want better terms, and we're able to get those better terms for our investors. And also it allows us to diversify beyond what we know. So
Yeah.
I'm here in Kansas City. I believe, like we were talking about before we hit record, you got to be local to your projects, especially the big value add stuff. So to me, if I'm running all the deals, I'm able to offer my investors Kansas City multifamily. That is it. Well, I don't think that's really fair. I want them to be able to have access to lots of other things. So this method allows us to diversify cross asset class, cross regions, and really have complete offerings for our investors with stronger terms. So it's a win-win-win, and it's been successful so far.
Yeah. And you can leverage that experience of the person
Yeah.
who is into that asset class for past
Yeah.
many years.
Yeah,
Who has gone
exactly.
through the ups and downs. Yep.
Yeah, exactly. And so that's part of what we do too, is we spend a lot of time vetting people and business plans and operators. We analyze between 30 and 60 deals a month that are already under contract. They're already pre-vetted by these reputable operators, and we end up closing about 3 to 4 deals per year. So we're very picky in what we do, and that's a big part of the due diligence is, hey, who is this team? What's their experience? What's their experience in this market with this asset? And how do we feel they'll perform on this investment? So yeah, that's a huge part of it.
And tell us something about your investor retention, or I would say, what are the main methods you use to attract the investors, or
Yeah.
what are the different funnels that you have created?
Yeah. So I have, of course, podcasting is a big part of it. So I have a show I have 2 podcasts. I have a sales show and I have a real estate show. The real estate show is Passive Real Estate Strategies. The sales show is How I Sold This. There's stories from top producers in our field. I also am very active on LinkedIn specifically. Through that, I have a lot of ebooks. I have a retirement calculator that's very popular. It's called the Retire Within 10 Bundle. You can go to that website and get one for yourself. It's got an ebook, the top secret investing strategy for sales professionals, a retirement calculator, so you could see how fast you can actually replace your income with passive income with our investing strategy. For most people, it's between 7 and 10 years. And then you also get a secret bonus gift too. That's going to be really, really helpful if you start investing in this journey. So that's kind of the funnel, what it looks like for us. We do a lot of podcasting. I do a lot of appearances. I do a lot of social media into the downloads. And then I do a lot of blogs and marketing and emails. You got to see a lot of our deals, stuff like that.
Yeah. So more about educating the investors, right? That's what it is. You educate the
Yeah.
investors, make sure they know each and every term of the real estate investments, pros
Yeah.
and cons. And then, of course, once you have a good deal,
Yeah.
they might be able
Hopefully
to
those stars align.
join in.
I
Yeah.
spend a lot, this is one of those fields where the more hands you shake, the more money you make. So it's constantly about meeting new people and kind of bringing them into our world and just letting them know, I'm very, very passionate about real estate investing, specifically, but alternative investments in general. I think that if everybody really understood alternative investments, there's not a single person that wouldn't participate. So I'm very, very passionate about just letting people know, like, you don't have to buy index funds your whole life. You don't have
Yes.
to max out your 401k and sit back and think, oh my God, I can't wait till I get to retire and enjoy my life. There's more out there. There's more things that the ultra wealthy do that you can do too. You don't have
Yeah.
to be a millionaire or a billionaire or be in a family office to take advantage of these. So it's just about meeting and educating people and letting them know that these options exist. And naturally, people kind of find their way into our journey and into our funnels.
Yeah. Yeah. I really agree with you because the thing is, like most of the people, as I always say, they are more inclined toward Wall Street investments, like
Yeah.
investing in stocks and bonds, and as you mentioned, filling up their 401k.
Hmm.
They don't look around with an option like if you have a 401k, you can also use your self-directed 401k or the self-directed IRA to
Yeah.
invest in real estate.
Hmm.
Um,
And that's huge
so
for people. I mean,
yeah,
people's jaws draw like they say, "What do you mean? Like I have 7 figures locked up in that thing. I thought I couldn't access it." Like, yeah, you can.
yeah,
So I agree. I think education is a big part of it, and us as a society in America, we don't talk about finances that much. We're actually one of those cultures that it's a little bit embarrassing and taboo to talk finances. So it's kind of impossible to expect people to be very sophisticated in these fields unless they do it professionally. So I think
yeah,
that's a big thing too is, hey, like don't be afraid to talk finances. It's an
yeah,
important part of what you do. Financial struggles are even the number one cause for divorce. So having a grip on your finances and your investing options is good for your personal relationships too. Like there's really no downside to it.
yeah. And the thing is, what I've noticed is our educational system also, right?
Yeah.
What they teach you is, okay, you do this, you learn this, you'll get a good job. They don't
Yeah.
tell you'll be able to build good business if you do this,
Yeah.
So
That's a big one. That's a big one. And there's a lot of I don't know if there's studies or papers or whatever we want to call them that really show that, the modern school system was designed to essentially create like factory workers, like people
Mhm.
who just understand to do the medial task. And at the time that was popular for the country, right? A lot of our modern school systems were created after major wars where the country needed things. They needed factory
Yeah,
workers. They needed people to invest in the stock market. So they created 401ks and IRAs because that's where those go. And really, you are created as a product of this big government machine that needs you to be a cog in their wheel. And part of that is stuff like how do we educate people? How do we
yeah,
tell them what to do with their money? Okay, we tell them to put it here, then that feeds our machine. So yeah, it's a big part of it. And without putting the tinfoil hat on too hard, it's just we're inundated with those things. So it's really cool to educate people on other investments and other strategies that they're called alternative, even though real estate is the initial investment ever made by kings and queens way back in the day. So yeah, I think it's interesting how we teach our people as well.
and it's most about helping them out, right? Making sure that they diversify and
Hmm.
they when they retire, right, they have a proper
Yeah,
fund in place, they have a proper investments in place which
yeah.
can support their retirement life.
Yeah, and can support their goals.
Yeah,
Some people they invest with us, and like most of our deals are going to be to help you become work optional as fast as you can. Replace your income with
yeah,
passive income. That's kind
passive
of our
income.
our methodology. Some people they don't want that. Some people want to buy assets that they can give to their kids.
Yeah,
Okay, that's another investment strategy. So it's all about what is that specific goal, and is that 60/40 stocks and bonds portfolio the best way, the best risk adjusted way for you to get to that goal? For most people, the answer would actually be no if you sit down and have a conversation with them. So, yeah, like you said, the education is massive and just finding out who we're right for and who's right for our strategy. And if you fit in that space, you could be a good candidate for for what we do.
yeah, that's true. And all right, so what do you think about the current market situation, like with the interest rate this high,
Yeah.
and what do you think in the future, like how in the real estate
Yeah.
market, your
Yeah, I
views?
think it was either yesterday or the day before. I think the sentiment really dropped where a lot of people were expecting, I think it was 3 rate cuts, and now they're saying, well, maybe we'll get one
Maybe
or maybe
one or
two.
two. Yeah,
Yeah, and when it'll come, it was June. Now they're saying maybe September. All those things, they're neither here nor there. I think people get so wrapped up in, the outside influences that it doesn't matter because I don't control that. I don't control what the interest rates are. I don't control if COVID is here or not. I don't control any of that.
Yeah.
I can only look at what I control. So a lot of people, what they say is they'll say something like, well, it's not a good time to invest. Interest rates are too high. Okay, so when interest rates come down and prices are really high, is that a better time to invest? Well, no, because then prices are too high. Okay, well, so at what point, what do you want to happen? Because these are all external factors. And what I like to tell people is, I don't think that there is ever, not a good time to invest. I think that there are times when different investment strategies become more or less easy to pull off
Yeah.
versus other times in the market. But I'm not sitting on my hands. You build a lot, so you get this. When interest rates started skyrocketing, yeah, it was painful to be a builder.
Yeah.
But who was not painful for was the person that locked in a 10-year 2.8% rate. So it's all about just adjusting your strategy. If
Yeah.
you go in with the same strategy every single time, yeah, you're going to have headwinds when the market changes. But when you're able to say, hey, okay, interest rates are high now, interest rates are low, how do we capitalize on these things? And you just got to get off the sidelines. I mean, you cannot, like I said, when I was selling real estate, there was this something like my mentor told me. He said, well, be careful. Every election year, is kind of a down year for real estate because people are kind of scared. They don't really like to make major moves when the country's about to change. And I thought to myself, okay, well, that's every 4 years. So that's 25% of the time, it's always a down market. He said, well, people are scared. Scared of what? Scared of change. Change is constant.
Yeah.
Like you said, interest rates, when are they going to come down? I don't know. It doesn't really matter to me because I'm not buying something saying if interest rates drop in June, I'll be good. You can't plan for those things. So I think yes, it is still a good time to invest. You just have to adjust your strategy.
No, rightly said. Opportunities you need to have an eye for an opportunity.
Yeah.
They are everywhere. You might have to
Mhm.
change your strategies on how you underwrite the deal or,
Yeah.
yeah.
Like what type
And
of debt you use too. That's a big one.
that's a
So
big
that
one.
could be
Yeah.
something where people say, well, it's not a good time to invest. Like, well, depending on what kind of debt you use, yeah, it is. If you use fixed rate debt when interest rates were 2%, you look like a genius now.
Yeah.
So it just depends on the strategy. So yeah, certain things change, but the only way that you understand how to capitalize on deals and opportunities is if you are always in the game. When you
Mhm.
take your foot out and you lean back, there's this ramp up period where you have to get back into the game. And then by that time, you're already behind. So just get in the game, stay in the game, just adjust. Don't worry about what the Fed is going to do. Who knows? Then they'll say it's an election year. They're going to drop the rates more aggressively than usual. I
There is
don't know.
always
Maybe.
something. There is always
Yeah, there's
something,
always
right? So
something.
yeah.
Um,
It was COVID, after COVID
yeah.
interest rate. So
Yeah.
there's always something, you can't blame one or two factors for not
Yeah.
being in the market.
Yeah. So you got to stay in the game. That's
Yeah.
that's my honest opinion. They always ask me, "Hey, is now a good time to invest?" Yes, it's always a good time to invest. You just got to stay sharp and you got to be able to adjust.
Rightly said. Can't agree more.
Yeah. Good.
All right. Hey, Justin, just loving this conversation, but would like to be mindful of your time also.
Yeah.
So want to transit to the last round of questions. Are you ready?
I'm ready.
Okay. All right. What is the one book that you'll recommend which had the most impact on your life or on your business?
Yeah, so I'm a really, really big fan of a book called Limitless from Jim Quick, and I think it's Kwik is how you spell his last name. It was about like brain training and how to focus and do focused and deep work. So that right there cut my work days down from 12 plus hours to 8 or fewer by being able to train my brain on focusing on things and to learn things quicker, do things faster. So I think it's a great book for anybody, especially now with technology always interrupting us and our attention spans getting shorter. So Limitless, I think, is a book that every single person should read.
Awesome. And what is or what are your main source of information to learn and grow?
So I'm big in the podcasting space and I love books. The books we kind of found out as we were moving this past couple of months, they're kind of hard to keep. So I'm transitioning more to like a podcast heavier environment. So I love
Mhm.
to learn that way. I like to turn my car into a university on wheels. So I think there's always opportunity to listen to podcasts and listen to people who really know what they're doing and understand these things. Whatever I'm trying to learn too is always available there. So I'm a big podcaster right now and I like books. transporting them is a little bit harder, but I'm always in the car, so I always have a good podcast to listen to.
Yeah, it's the same like I do the same,
Yeah.
I listen to like the audiobooks or podcasts when I'm
Yeah.
in car. Just use of time while you're
Yeah.
driving.
Yeah, exactly. University on wheels. So that's the
Yeah.
best way to put it.
Uh, what is the best business or investment advice you'd like to give to our listeners?
The best investment that I like to make. Is that what you said?
No, in business or investment advice you'd like to give to our
Oh, okay.
listeners.
To me, I would say don't get so attached to the outcome you're pursuing, or people say they're like their goals. Like when I was selling real estate, they would always say, well, what are your goals? And somebody would go, oh, I want to sell, one house a month. Now in the Bay Area, that's really big money. And I've always thought that was so foolish, because who cares what your goal is? Why not make it 2 houses a month? Like, why not 3? Like, your goals don't really mean anything. So don't focus on your goals. Don't focus on what you want to happen. Focus on your outputs. Focus on what you can do, and then the outcomes will happen. So to me, I'm always very big on process. So if you want to, and if you're real estate, you want to sell 1 house a month, okay, that's a great thing. But what are you going to do to get that? Maybe it's I got to make 50 calls a day. I got to talk to 10 people a day. I got to, whatever it's going to be. Don't focus so much on the outcome. Focus more on the process to make the outcome happen. And then through that, you're always going to win every single day. Because even if you go the day and you don't get a meeting or you don't get a listing or whatever it means, it doesn't matter, because you won the day if you executed on your process. So yes, goals are great, but ultimately you can't control that. I couldn't control who signed the listing with me, but I could only control the things that I could: how many calls I made, who I spoke to, how I controlled my day. So don't focus so much on the outcome. Focus on a process and executing that process every day, and you'll win.
Yep. Be disciplined, right? As you said.
Yeah. Yeah. You got to win enough days to win the month, then to win the quarter, then to win the year.
Yeah. Yeah. All right, Justin. How can Decoding Cashflow listeners get in touch with you?
Yeah, I'm most active on LinkedIn. So our company's called President's Club Investors. If you search that on LinkedIn, you'll find me. The President's Club Investor is kind of my little monocle. So Justin Moy, if you search me there, you'll find me. The Retire Within 10 bundle, you go to that, retirewithin10bundle.com. You can find the stuff we talked about earlier, but I'm super, super active on LinkedIn. I post there every day. I'm on there 7 days a week. So that's probably going to be the best way to get a hold of me.
Awesome. All right. It was a great show. It was a pleasure talking to you, Justin. And we'll stay in touch.
Yeah. Thanks, Ted. This was great. Thanks so much.
Thanks for listening to Decoding Cashflow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cashflow, and we'll catch you in the next episode.